Hi, everybody. This is Ron Lewis with MedigapExpress.com. I have been specializing in Medicare Supplement insurance plans now for over 12 years. And during this time, I've picked up some tips and tricks that I use to help my clients save money on their Medicare Supplement insurance plans. And I'm going to share 10 of these tips with you today. I hope you find this video to be interesting. And if you would like to subscribe, please click the subscribe button, and that way you will receive a notification in the future when I make new videos. So let's get started. Okay, so here are 10 tips that I'm going to share with you today to help you save money on your Medicare Supplement insurance plans. Tip number one, shop around every year. Just like your homeowner's insurance and your car insurance, you should shop around every year to make sure that you aren't paying too much. Nationwide, there are 10 standardized Medicare supplement plans to choose from. These are Plan A through Plan N. So when I say standardized, that means every Plan F, Plan G, etc. is exactly the same no matter which insurance carrier you're with. So now it's much easier to compare apples with apples. And although the plans are standardized, the rates are not standardized. So the rates can vary significantly from one insurance carrier to the next for the same identical plan. And to give you an example, I have a client of mine, it's a husband and a wife, and they each had Plan G with a certain insurance carrier. And I shopped around for them and I found Plan G with a different insurance carrier, and they saved $5,300 a year on their premiums. Now, this is a very extreme example, and I've never had a situation that was quite this extreme before, but usually I can save most people from $300 to $500 a year each. So in this particular example, it, it really made a huge difference on shopping around and comparing rates. Tip number two, in California, there's a law called the California Birthday Rule. If you live in California, you should definitely take advantage of this rule if you have a Medicare supplement plan. What this rule is if you have a plan like Plan F or Plan G, for example, you can switch like for like, or such as Plan F for Plan F, or you can switch from a higher plan, in other words, a plan with greater benefits, to a plan with fewer benefits, like Plan F to Plan G. So you can do this every year within the 30 days following your birthday, regardless of your health and without answering any of the health questions on the application. So this is a guaranteed issue and you cannot be turned down for coverage. Now, one other tip with this is that several carriers will also let you apply during the 30 days before your birthday. So the official law is during the 30 days after your birthday, but if you can apply with one of these other carriers, you can get in at the younger age. Now, rates are based on your attained age, basically in California. So if you're turning 67 next month, you could get the rate for a 66-year-old today if you apply today with one of these other carriers. Tip number three, some insurance carriers offer a household discount from 5 to 12%. So this means that if a husband and wife were domestic partners, each had a Medicare supplement insurance plan with a particular carrier, they would save 5 to 12% each. Now, several carriers will also let you get the household discount even if the second person doesn't have a Medicare supplement plan. In fact, they're very liberal. You can qualify for the household discount just by having a roommate living in the house. So that makes a huge difference in the premiums you're paying every month if you can save an additional 5 to 12%. The fourth tip is if you're signing up with a new company, try to go with a company that gives you a 12-month rate lock. A lot of companies won't guarantee the rates at all, or they'll give you a 6-month rate lock. But most of the insurance carriers that I work will lock in the rates for the first 12 months. And I've had situations when I first started where someone signed up and a month or two after their policy began, they received a letter in the mail stating that they were getting a rate increase the following month. So nobody wants any unexpected surprises. So I would definitely go with a carrier that locks in your rates for the first 12 months. The fifth tip is for people who are turning 65. There are a couple of companies that will give you an additional $20 to $25 a month discount on your premiums if you sign up with their Plan F. Now, this can also be a huge savings for you, but the only problem is with these two carriers is that one of them will only lock the rates in for 6 months and the other will lock it in, well, doesn't have a rate lock guarantee at all. So you have to weigh out the difference in the price, but sometimes it might be worth the gamble to do that. And tip number 6, if you have Plan F, you might want to consider switching to Plan G. Plan F and Plan G are identical in every way, except with Plan F, there's no deductibles, and with Plan G, there's a $183 per calendar year deductible. So, in other words, with Plan G, the most you're going to pay in any out-of-pocket expenses is $183 during any calendar year. And that's the only difference between the two plans. Now, the reason a lot of people have been switching from Plan F to Plan G is that a lot of people can save more than $183 a year on their premiums. So if your savings is less than $183 a year, you're better off with Plan F. But if you're saving more than $183 a year, then Plan G ends up being cheaper and being more cost effective. And to give you an example of the premiums, in San Diego, one of the lowest rates for Plan F right now in San Diego County is $190 a month, and one of the lowest rates for Plan G is $156 a month, or $408 a year gross savings. So if that person ended up spending the whole $183 from the $408, they would still end up with a net savings of $225 a year by switching to Plan G. Tip number 7, there's another plan called the High-deductible Plan F. And this plan is identical to the regular Plan F, except there is a high deductible of $2,200 per calendar year in 2017. Now that amount can change from year to year, but that's what it is now. So some people don't mind having a more of a catastrophic type plan because they can save a lot of money on their premiums. So after you pay the first $2,200, the high deductible Plan F and the regular Plan F are virtually identical from that point on. And to give you an idea of the difference in premiums, as I said before, one of the lower rates for Plan F in San Diego is currently $190 a month. You could get the high deductible Plan F for about $57 a month, which would save you about a year on your premiums. So that's another option you might want to consider to save some money. Tip number 8, when you get a medical bill in the mail, make sure to check it for accuracy because mistakes are made and sometimes people just automatically pay amounts that are billed to them. So you want to make sure that you're not overpaying anything that you shouldn't be paying on. And tip number 9, if you're on Medicare and you end up going to a hospital, check the status because a lot of hospitals try to put people in or categorize them as under observation versus as an inpatient. You want to be categorized as an inpatient if you go into a hospital. And the reason is if you're placed as under observation, Medicare isn't going to pay, and therefore your Medicare supplement isn't going to pay either because your supplement will only pay if Medicare pays. So this has been a big problem because Medicare has been putting pressure on hospitals to change the category that people are entered as to help save money. And finally, tip number 10, you should work with an independent insurance agent, such as myself, versus a captive agent. And the difference is that a captive agent works for one particular company only. They can't show you any rates for any other company other than the company that they work for. So you should be with an insurance agent that is an independent agent versus a captive agent to make sure that you're being shown all the options available, not just one option. So that's pretty much it for today. I hope that you found this video to be helpful and informative. And again, if you would like to subscribe to my YouTube channel, click the subscribe button. And then in the future, you'll be automatically notified when I make new videos. And if you would like a Medicare Supplement insurance quote, or if you have any questions, please give me a call. I can save you money. Thank you very much for watching.